Hello everyone, it's Nas here again. We've got a historic moment happening right now and I wanted to share this with you. What's happened is in Asian trading, we're talking about Hong Kong, Japan, Singapore. In Asian trading, the oil price, which is WTI I'm referring to, has slumped overnight. I mean, it was 5:30 in the morning. I'm in Dubai and wake up and I see this, which is quite incredible actually, because oil has touched $15. And if you look back at some of my previous analysis, you'll see that I was speculating that oil could be easily around 17 or possibly below. In fact, I was having a conversation with with another oil trader actually a couple of weeks ago, and we're talking about how there's a possibility that oil could come down to 15, and and it was only a possibility. We were thinking of the worst case it could come to 15, and we didn't think that the worst case would actually materialize. So it's quite incredible actually to see this, because this is the lowest it's been since like 1999, I believe. So would you agree that since 1994 there's been a lot more industrialization? Now, for oil to be on levels that are similar to some 30 odd years ago, it's just ridiculous. It's just ridiculous. Oil will be required. Oil will literally just jump right back. It should jump right back into this zone, which is the 30 to 40 range. Okay, so at $15 it's insanely cheap. But the question is, are you able to sort of get your timing correct and get into a position and hold until the price has gone into that range? Yeah, obviously ideally I'd want to target about $30 to begin with. I mean, we've got a position where we entered at 20. If I just quickly revert to that, and you can see we're on a loss on this actually. We're on a loss on this, but obviously I've got some hedges in place, so our net isn't so bad. And this net will decrease because I've got these puts which will increase in value as oil falls further. So I'm not too worried about that, but the point is, if you get in too early, you might hit your stop losses and you might be pushed out. Unfortunately, in our case, something weird has happened actually, which I'll show you here. You see, oil was here, and the chart I was showing you on the other screen, in the black screen, is the spot price for WTI, which is right now. But what's happened on our options trading platform is they've switched to the June contracts, and the June contracts are worth a lot more. So they switched to that on the 17th of April, are worth a lot more. So which can be baffling, but these are future prices. So what's going to happen is, as we get closer to expiration of the May contracts, you will find that these prices sort of converge. So I'm assuming somewhere around the 21 level, both prices will meet possibly, and thereon the charts will start looking okay. So it's a bit of a weird situation, but we'll see, and I'll keep updating you guys on this movement so we can learn something from this. It did take me by surprise actually, because again, I haven't been in the market for 10 years and this sort of stuff doesn't exactly pop up all the time. It's a situation known as contango, where the future price is significantly higher than the current spot price. Cool, so that's that. Okay, so where do we go from here? So you will, if you're following my blog, you will see I think the last blog that I wrote, where I was pointing out that you should watch out for some divergences on these technical indicators, MACD and RSI. It's still on track. It could show divergences. I'm not sure about RSI. It might end up going to oversold levels. But if oil dips a little lower, which is very possible at the, judging by the speed it's moving at, I don't see why it can't even hit $10, to be honest, which would be absolutely crazy. But yeah, we just want to watch out for some indication of oil reversing, and before we go into another trade. Hey, I'm back at my desk. As I sort of mentioned before, there's a good chance that our account's going to go into break even or possibly profit. And yeah, as oil prices have been plummeting, here we are. the account, we were on a loss for the last few days, and it's just broken into profit, even though we're totally wrong. Let's have a quick look why. So we've got the calls with a strike of 21.5, that's making a nice loss, and the puts that we had, oh sorry, let's just mention the oil futures contract that we also bought, that's on a nice loss, and the put contracts that we had as a hedge, they went into profit, until eventually the value of the puts are greater than the value of the long positions. So here we are, back into profit, and as long as from this point onwards, as long as oil keeps dropping, we will just keep going to profit. So it's kind of ironic because we wanted oil to go up and make profit. So that's the whole beauty of doing options, if you can do it skillfully. What I'm going to do is I'm going to actually close this position in a short while. In fact, I'm going to liquidate all my positions because I'm not looking for a profit on this, because oil will most likely rebound and anything could happen any minute because it's dropped so severely. Who knows, we might get Mr. Trump throwing out another tweet or something and everybody's just suddenly jumping onto it. So I'm going to close this out. I'm going to wait on the sidelines and then get back in with a similar value of positions, and I'm just going to get the calls at a cheaper price. So let's see, and just for the record, it's 1:47 UK time. Guys, this is history being made here. I can't believe this. Earlier on I was just I'm speechless. I was just saying that could it just go to $10, and I can't believe oil is that's the current spot price for WTI is at 12.6, 12.5. This is mad. This is absolutely crazy. Obviously it should be annihilating our current positions. Let's have a quick look. So as you can see on our account, we're actually not getting annihilated. Why is that? Again, I'll just go back to my positions and refer back to what I was referring to before, which is that we're doing a straddle position. We've got a hedge in place. So for this call where we wanted the price to go up, that was opened when price was $20, by the way. I opened a hedge, which was a put at a strike of 20.5. I had to do two actually. I sort of underbought, shall I say, at the time. Then I went for a small test trade on the actual underlying asset oil, and I hedged that with a put with a 21 strike. So as you can see, the put is gaining value very rapidly now as the price is dropping. So our balance is coming close to break even until it will eventually pop into profit, because the value of the puts will be so much higher than the value of the calls. But that's if oil just drops that badly. I mean, today is pretty bad. I mean, let's see, for the June contracts, we're down 10% already. We're down 10% already, which is pretty bad. And for the current spot May contracts, we're down 31%. So this is insane. As you can see, there's a huge gap in terms of the price movement, and this is what is known as a contango. You can read more about contango in my blog. This is when the future price is substantially higher than the current spot price. This is history being made here, guys. This is 6 o'clock. It's 6 o'clock UK time now, and oil has literally just slumped, and we're talking about the May contracts. It's down 71%. It's never dropped by that much in the history of the stock market. What is happening? This is crazy. I didn't even expect this. If I expected this, I would have shorted oil. Look at this. Oil is at $5 a barrel. They're literally giving oil away for free because nobody wants to hold it in storage. This is crazy, guys. Let's just zoom in and have a look at it on an hourly basis. Let's see what's going on. Holy schmoly, it's just been a constant slide today. It's just been a constant slide. 12 was one critical point, and now it's just surpassed 10 and down to 5, and it's just dipped below 5. I don't think it will dip below anything less than 5 if I'm honest, but hey, I didn't even expect 5 in the first place, so I could be equally wrong. Who knows, they might take oil down to as close as 0 or 1 or $2 if they're so desperate to offload it. But what actually concerns me is that expiry is at the end of trading day tomorrow, so everybody seems to be rushing today. I have a feeling tomorrow could see a spike up or something, so we'll see. Alright guys, it's been a hell of a day. It's 6:30 UK time. I've been at my desk all day today. I don't normally sit at my desk constantly. It's just because oil is extraordinary today. And just looking at our options portfolio, it's up by 2.8k. That's after being wrong, by the way. So let's have a quick look at the positions. As you can see, the put positions are starting to exceed the loss on the call positions. So a net is a profit. So that's the whole beauty of straddle, which I've of course said repeatedly. So this is pretty cool. Just want to show you guys how it can work out. As for oil, let's have a look at what's happened to the spot price of oil. It's quite shocking actually. As you can see here, oil fell as low as $1. I don't think any trader has seen this ever in their lifetime. This is just insane. Going to be watching this closely to see what happens. It'll be interesting to see what happens in the Asian trading tonight, and tomorrow is going to be a hell of a dramatic day. Let's keep watching. They're selling oil for 2p. Wow. That's called a collapse. 2p. That's the price right now.
Can it go lower than that now?
What is zero? Alas.
And after zero?
All these investors lost all the money. Everybody's finished. Okay, so the markets have closed, and I just want to run you through the positions that I had. I've closed all those positions. The reason being is that I don't know what's going to happen the next day, because oil plummeted to a point like never before. And we're talking about the May contracts, by the way, not all the oil contracts. So the May oil contract is expiring today, and as a result everybody was just dumping them yesterday, and it went to below zero, believe it or not. That doesn't make sense to me, but hey, it's possible. It just means that if you take delivery of the oil, you've got to pay somebody to come and take the oil from you if you can't make the arrangements to store it. So anyways, we're not going to go into those details. Let's have a look at our trading. So our account is back at 15,000. Bear in mind that we started with 10,000 pounds, 5,000, and then we added another 5,000. So our profit here is actually 5,000. So it's up about 33%. So we're back on 15,000. You'll remember on my last set of trades we took a loss. If I just browse down here, the May ones there, these May contracts, we took a loss there. These added up to around £3,000 loss. Unfortunately we had to take that, because the May option contracts were expiring. May option contracts were expiring, right? So we had to close out. In hindsight, the mistake was that we opened our positions too close to the expiry, and unfortunately oil didn't move substantially enough to take us into profit. So that's that. Unfortunately, sometimes these mistakes happen. But anyways, not too bad for a guy returning after 10 years. Portfolio up 33% in 2 weeks. Let's see what happened to the positions I had up until yesterday. So let's see, I had a long on the underlying asset oil. I also had a strike 21.5 call. Both of mine losses, obviously, because the market just dropped. But I also had some hedges in place. So the puts, the 20.5 and 21 strike puts, and as you can see, the profits gained on the puts outweigh the losses made on the call. So my net was a profit of, let's just quickly calculate this. Yeah, the net was around 3,000 as well. So it compensates for the loss we made on the last trade. So we're back to where we should have been, which was up 33%.